Right. Okay. As far as data this morning is concerned, what struck your eye?
Well, there's lots of numbers out today. I've just picked up on a few things. So first of all, the one that probably garnered the most headlines early on in the session, Eurozone industrial production for May. This is the month-on-month change, down by 0.4%, minus 0.4%, versus the forecast of a positive number of plus 0.2. So is QE working? Well, possibly not, judged on that metric. And once they look at the people in the ECB can sit back and take stock of anything other than Greece, they might be concerned about that, as they might well be with these two German inflation numbers that we come to next. First of all, the CPI, the Consumer Price Index for June. Again, we look at the month-on-month change, down 0.1%. True, that was in line with the forecast of minus 0.1%. But it's hardly inspiring, is it, when you're trying to reflate and reinvigorate the European economy. Year on year, well, it was at least a positive number, plus 0.3%, and equally in line with the forecast of plus 0.3%. But once again, if the most proactive economy in Europe can only muster 0.3% annualised inflation, it's not that's not really going to get the baby bath as we
So
see.
it's basically a double nightmare: bad industrial production and bad inflation or lack of inflation. We need something, a real shot in the arm.
Yeah, absolutely. I mean, we stay with inflation because they also had the ECB's favoured measure of inflation, the hybrid index of consumer prices, HICP. So this again, the June month-on-month figure, once again, in the negative. So deflation, minus 0.2%, again in line with the forecast, so no worse than expected. But perhaps more worrying still is the fact that year on year, by this measure, which the ECB sort of puts great store by, as I say, we're only seeing plus 0.1%, again in line with the forecast, but still, it's flatlining, isn't it? And then here into the UK, an equally disappointing inflation outlook. Here we had producer price indices or indices for June. Again, the month-on-month number flat, 0.0%. Forecast was hardly exciting at plus 0.1, but it was expected to grow, the prior read being plus 0.1%. So that's something for the Bank of England to think about. Meantime, Mark Carney was speaking in Parliament and seemed to sort of contradict the data, saying that the time for rate rises is moving closer. It's obviously a very open-ended statement.
What is he smoking?
Well, we talked about this in the office, and I wonder whether they're looking through the actual headline inflation data and perhaps keeping an eye on things like wage growth and employment. We've taken the view in the past.
Yeah, but you raise interest rates, it's a 0.25% or 0.5% or whatever it is over the next year. You'll have PPI at minus 1% and minus 2%. This is not the way to go, is it?
Well, that's very true, and that's also why our house view is that we don't expect to see interest rate rises, that is, this side of Christmas in either the UK or the US. Okay. But we shall see.